Mortgage rates really not feeling the love. This is the weekly report on Major Money Matters. Hey, welcome to Major Money Matters. My name is Major. I'm the host of Major Money Matters. I'm a mortgage broker powered by Edge Home Finance. And this is the weekly report where we talk about what's going on economically and how it could be affecting home buyers and home sellers. Let's get right to it. Let's bring up the charts first. First, we bring up mortgage-backed securities. And again, if you follow this channel, you know as this chart trends down, interest rates are going up. As this chart trends up, interest rates are going down. Now, beginning of February, everything looked great. We were on the edge of crossing over into the high fours territory. We're in the low fives, national interest rate average. And then things started to sell off. The Fed started to speak and messed up the markets for everyone. But this has resulted in interest rates going higher. And let's talk about where they are, okay? So I think last time we did this, we were at about 6.02, trending into 5 territory. Now we're back up, trending actually into 7 territory. And these rates, by the way, are Mortgage News Daily. This is not an interest rate quote. This is just a site I use just for realtors to just quickly reference. There's a link in the description that you can reference this, just so you know where interest rates are trending. Of course, this is all credit dependent. This is the average of national interest rates. So why are things going on like this? And let's take a look at break down some factors that's affecting this. CPI, the Consumer Price Index, and PPI, the Producer Price Index, both of those numbers came out this week. And these numbers to give a good indication of what's happening with inflation. Now, these numbers were higher than expected. The CPI, Consumer Price Index, talking about how much consumers pay for goods and services. These numbers were rolled out and inflation rose 0.5% in January, more than expected. Okay, so it's about the expectation versus the reality, and those numbers were higher. And then we come back 2 days later with the PPI numbers. Those numbers were higher too. So that's why you're seeing interest rates tick up. We're hoping to get some relief next month. And when those CPI and PPI numbers come out, I think they will be a lot better, and you're gonna see interest rates trend down. Don't know how low. Hopefully we get back to the mid 5s on a national level for average of interest rates across all spectrums, and get back into some more reasonable interest rates out of this mid 6s, high 6s range. Interesting charts I want to take a look at next. These are talking about housing vacancies and rental vacancy. And take a look at this chart. Housing vacancies, this is the amount of people that are actually living in homes, okay? These are not homes that are for sale. Obviously, if you have a high housing vacancy, those homes are looking to move off the market quickly and get people into those homes. You might see some price reductions there. But if you look at these charts that are talking about housing vacancies and rental vacancies, you say there's not a lot of vacant homes available. So if you're a realtor, there's not a lot of vacant homes where you have flexibility in your pricing just to get something moved off the market. You can get a deal on something like that. That is not happening in this market right now. If you take out COVID, the gray area there, that was the last most recent recession, take that out, and you will see that housing vacancies and rental vacancies are at an all-time low in the cycle. So you should expect that to put more upward pressure or make prices more sticky, because you got to worry about, how people are going to move out of homes and stuff like that. There's just not a lot of vacancy. And when you combine that with this other chart where we talk about housing starts, so we also take a look this week at housing starts and the numbers that are coming out. Listen, if you're expecting there to be this onslaught of inventory coming on, it is simply not happening. Take a look at this from builders. So housing starts, and this gives an indication of future inventory. Housing starts for single family homes are down 27%, okay? And if you look at completions, yes, completions are up about 13% year over year, but really there's not enough starts, housing starts, to make it enough inventory going forward to relieve some of this pressure that's being built up on the inventory side. So as buyers start to come back into the market in the spring and summer, you are going to see upward pressure on housing prices, regardless of the interest rates. That upward pressure is because simply there is not enough inventory, and builders are not even starting permits anymore because those are even down 27%. So you're not seeing the inventory come to the market, that builders are building more. There is a need right now to offload some inventory from builders, but if you're looking for an onslaught to come on of the release this pressure that we have of not enough homes, not happening anytime soon because builders are more pessimistic. In conjunction with that information, we take a look at this other story from CNBC where builders will scramble to catch up on demand for years, okay? Next week, I'm gonna tell you where this demand is coming from. I will give you a head start and let you know that there is 40% more people in the United States right now between ages 25 and 40 years of age. And if you're in between ages 25 and 40 years of age, likely you're looking to buy a house, okay? And people are starting families in between those ages of 25 and 40 years of age. I mean, really, that's 15-year span. That's enough time for you to get married, potentially get divorced, and get married again. So you probably have 2 houses that you're buying in between that time. So there is going to be a much more demand for housing formations, as it's called, and there's simply not enough homes. Upward pressure on houses in the long term. All right, so that's it for this week. Listen, yes, rates are higher. Be sure to check out my other video that I'm putting out, how to get an interest rate in the 3s and 4s in 2023. That's gonna give you, if you're a buyer, an idea of how to get a lower interest rate for this year. And if you're a seller, it's gonna give you some strategies you may be using to market your property. Realtors, strategies you can use to market your properties and get into escrow extremely quickly. That's it for this week. See you guys next time on Major Money Matters.